Hey, what's up, everybody? Good morning. So, over the years, I keep trying to improve my day trading strategies. I'm just going for a walk, by the way. It's a beautiful morning. It's 18 degrees here in Istanbul, Turkey. I live right next to the forest, so it's a really nice opportunity to always get out, go for a walk, enjoy some nature. So, over the years, I've always tried to improve my day trading strategies, and it's been extremely difficult, especially for the past 5 years or so, because I've hit a wall. I remember when I first started out trading, what I would do is I would just hunt for oversold and overbought conditions and I would long or short those conditions. But over the years, I'm starting to see so many different flaws in all of these indicators that I use. And there has been so many different types of indicators and strategies that I've used. And what I conclude with all of them is that it takes so much time to find these confluent reasons to enter and manual type of analysis. So right now, I've got a few different types of strategies that I use. And of course, one of them is shorting the fifth wave scenario. And another one is looking for breakouts and trading the continuation, which I often miss. These breakouts and these patterns, they need to be monitored a lot, and you got to constantly keep pressure on them. You got to be in front of the computer. You have to have all these types of alerts up, and it can be extremely frustrating. And I'm also finding a lot of flaws with these types of EMAs and RSI and MACD because they're lagging indicators, and oftentimes when it actually happens, for example, when a MACD crossover happens, it's already too late most of the times to get into a position or to get out because lagging indicator relies on an average based off of past data. And just like RSI as well, it's always going to formulate as the price is actually forming. So it doesn't really help you too much when it relies on this type of past data. Another major flaw that I find with my strategy is Elliott wave theory because when I first started trading, Elliott wave theory was amazing. It was a great skill to know, and I relied on it heavily for all of my day trades. And I firmly believed back then that you can apply Elliott wave analysis to pretty much any single chart, and it would help you. But over the years, I'm starting to realize that it has an immense amount of flaws, and one of the flaws is that it can't be applied to everything, and it's also very circumstantial. And oftentimes, you believe that a fractal has formed perfectly, for example, a 5 wave count, and then you short it, but it actually doesn't drop to the downside. It ends up making, for example, an extended 5th wave, and that's unpredictable. And because of these unforeseen circumstances that can occur, Elliott wave only works during a continuation, in my opinion, and after that, it's very circumstantial. Only use it when it fits accordingly. And in my opinion, like RSI, it's only good to use to gauge when it's oversold and when it's overbought. That's pretty much it, other than using it for bullishly diverging RSI or bearishly diverging RSI. And same with MACD as well. Often enough, you see a crossover and nothing even happens. Or oftentimes, you see it lingering above extremely high time frames for a long period of time, and the drop is just unpredictable. And when it crosses over, it's just already too late. So then you'd have to use a confluence of different combinations of indicators such as RSI and MACD to make decisions based off of where they are at a given period of time. And that can be frustrating because there's many different types of indicators to track combined with EMA, volume, looking at price action, doing Elliott wave as well. And then when you start to mix a lot of these indicators and different strategies together, it becomes really jumbled. And because of that, you want to simplify. So in my opinion, the most profitable traders in the world, they have two very unique set of skills. One, they have a perfect way to scan the market, and they know exactly which are the most volatile coins to trade for that day at any given period of time. And two, they have a solid strategy that has been back tested multiple times. That's actually very simple as well, but they need to differentiate themselves from other people. For example, for RSI and MACD and EMA, everybody uses it. And even Elliott wave nowadays too. And trading is very psychological based. So if everybody is using the same set of tools and drawing the same trend lines, well, how can you differentiate yourself from these other people that are doing the same thing? How can you actually extract profit in the market if everybody sees the same thing and does the same thing? And that's the problem that I'm running to after 9 years of trading. So I look back to the trades that I've made in, for example, 2021. I reviewed about 200 different trades of mine in the bull market. And it blows my mind that I was trading over $1 million in sizes, and I was still making over $1 million in that period of July 2021 to the end of the bull market in November of 2021. And when I look back at these videos, I say to myself, that guy had a lot of balls. And the majority of my trades are actually short positions. They're 80% short positions. And being the trader that I am now, I would actually never take those kinds of trades that I took back then, because the market is ever changing. And the conditions to short in this type of bull market right now is very different than in 2021. So because the conditions are changed and because I've evolved as a trader as well, it's very difficult to adhere to the same set of principles and strategies that I held back then in 2021. So something must change, which has led me to a lot of different realizations. So back then, I was mainly focusing on shorting the fifth wave, where I would focus on hunting for bearishly diverging RSI and also MACD as well. And I would literally try to time the top. And thinking about it now, there's not a lot of confirmation in those types of trades. And nowadays, I would never take these kinds of trades because I understand that there's a delicate balance between risk, profit, and confirmation. I believe that the best traders out there have a delicate balance of all three. So for example, if you go to a restaurant or if you go for any place that has service, you're going to get a delicate balance between the cost of something, the speed of something, and the quality of something. And trading is very similar when it comes to the balance between your risk, your confirmation, and also your profit. So in my opinion, it's good to delicately balance it to the point where there's a lot of confirmation, there's little risk, and there's a delicate amount of profit involved as well. So back then, I didn't focus on the confirmation, and I focused mainly on the profits. Very high profit, very little confirmation, and also very high risk. So because of that, I was able to profit immensely, but I've got to ask myself, how long could I actually keep trading like that for if the bull market kept continuing? I was trading in the $1 million of sizes. I was taking the most obscene risks that you can imagine trying to catch the top, and I caught it the majority of times, making over a 7-figure profit. But in this type of bull market, it just cannot happen because I've evolved into the kind of trader that more so thinks about how much I can lose rather than how much I can win. So nowadays, instead of focusing on the high risk and the high profits and the low confirmation, I only focus on the confirmation now. So I needed to develop a way for me to have high confirmation to increase the win rate so I can play larger sizes. When you play with huge sizes, over $1 million to day trade, you have to ensure that the confirmation is extremely high for you to risk anything. Otherwise, it would be just more so gambling. Of course, combined with very good risk management and high discipline and good focus as well, you can capitalize. But the confirmation is what's going to set you apart from different types of traders. So over 9 years now, I've realized that RSI and MACD is really good, but circumstantially. Elliott Wave is also great, but also circumstantially used. They're more so secondary tools that I'd be using now, in addition to what I would focus on to capitalize the most in the market. And some of the tools that I'm now gravitating towards are more so volume-based and price action-based. And I find that the best traders out there in the world, they keep their charts simple. They don't do a lot of huge technical analysis with different indicators, and they focus only on things like price action and volume. But before you can even find these types of trades, you got to have a method of analysis to find different coins to trade. That's going to be very quick and efficient. You can't spend your time individually analyzing a market. When you take a step back and you ask yourself, how am I finding these coins to trade? How are you finding these coins to trade? What are some of the methodologies that you're utilizing every single day to scan the market so you can find the best coins of that day to trade? Because when you think about the best coins to trade, it's vital to your success, because if you choose a bad coin to trade, well, it can impair or maim the potential profits, and it could also have inherently more risk as well. So by choosing the best coins to trade of that day, you're ensuring that it has the least amount of risk, it has the most confirmations to trade as well, and it has the potential for the most profit as well. But how do you actually find these coins to trade? What are some of the tools that you would be using? Well, some of the things that you would look for is most likely volume. Volume is a very good trend change indicator that can tell you if there's open interest and if people are getting interested in it. Another thing that you would look for is volatility as well. Well, if there's volatility that's based off of, for example, the chandelier exit indicator or even the ATR, those are going to be really good uses of gauging if the market is moving, especially when you combine it with volume. But now when you take a step back and even look at it further and you ask yourself, well, how do I look for a volatile coin with volume? What are some of the methods that I'm going to be using? And that's exactly why I'm creating this new indicator of mine. This new indicator of mine is going to scan the market very thoroughly every single 5 minutes based on the parameters that I set, and it's going to give me an auto-populated list of everything. I realized that if I had the ability to scan the market and find the highest volume coins combined with the most volatility, I'm going to have an edge over the competition. So for example, TradingView has a fairly decent scanner. On a scale of 1 to 10, I'd probably give it about a 3 because it lacks a lot of the professional functions that a $1 million trader would want to have. And on TradingView, they give you just the bare basics, and it's also dependent on the candle closes. So for example, it only goes based off of when the 4-hour is actually opened or when the daily is opened. Whereas if you had a custom indicator where you can set the different parameters by the hours or the days that you scan for the most volatility combined with the most volume, wouldn't that be a lot more efficient than using something that doesn't even consider different time frames over periods of time? So this indicator is going to be released in about 1 week because I'm still developing it, and the cost to develop it was exceedingly high, way beyond my actual expectations. But in order to put your imagination to reality, you have to have a professional coder that's extremely talented and can see your vision and put it into reality. So to do that, it was a very expensive process and especially long process to communicate with the coder to put your vision to reality. And now that you have, let's just say that you had an ability now to scan the market and look for the most volatile coins to trade that day, combined with the highest volume as well. Well, now what you're going to need is a solid strategy, a strategy that not everybody knows about, a strategy that is unique, a psychological strategy that not everybody sees and is utilizing, such as using RSI or MACD or looking at EMA or even Elliott wave theory. If you want to be ahead of the pack, you have to do something that's revolutionary and think outside of the box. Otherwise, you're just a sheep using every single tool that everybody else is using, drawing the exact same trend line, using the same basic indicators like RSI and MACD, and trying your best to do Elliott wave theory, but it fails. You can't rely on RSI or MACD. They're lagging indicators. Everybody uses it. It can be overbought or oversold for incredible amount of periods of time, and it's not always going to indicate a reversal. Oftentimes enough, they just end up hovering in the completely overbought and oversold conditions for a long period of time. And by the time the drop happens, it's just too late and it hasn't helped you in any way. In Elliott wave theory, because the fractals are almost impossible to subdivide most times, it becomes unreliable when you combine it with the fact that extended fifth waves happen all the time. And if you rely on it, you're just going to end up getting burned the majority of times. So got to step away from it. Also, when you look at indicators such as EMAs or any moving average, you got to understand that they are a moving average based off of a sample that has been given to you in the past before a set of data, and it formulates an average price for you. So because it's a lagging indicator that relies on past data before, it can't be counted on immediately when you're making a decision for day trading on lower time frames. So because of that, all you can really use EMA for is to gauge a period of a trend. For example, if you're using a 50 EMA, it's going to give you a gauge of the trend, whether it's slightly bullish or bearish. Or 200, it's going to tell you if it's bullish or bearish. But it's also unreliable because that's really all that you can use it for. And if you use a 200 length EMA or any moving average, the length is so long and relies on so much data that by the time that it crosses over or anything happens, it's already too late for you to notice what's going on. So it becomes unreliable as well. Another flaw in a strategy that I use is breakout patterns. So the problem with breakout patterns is that it's inevitable for you to get bull trapped or bear trapped. It's always going to happen. You're always going to see that ascending triangle that's forming, and then it pops its head out slightly to the upside, and then you believe that it's going to be bull trapped, so you would end up going to a long, and then shortly after, what ends up happening is there's a gigantic drop to the downside, and there's a huge capitulation. And this happens all the time in the market, so it's unreliable. Therefore, there must be some sort of method of confirmation if you want to trade these types of continuations or breakout patterns. And that's why when you evaluate everything, when you look at a systematic way to scan for a coin to trade, it must be efficient, it must be effective, it must be quick. Otherwise, there's a lot of downtime. And then there must be a really good strategy for you to take on these trades that you find based off of using a scanner. So 9 years in trading has led me to this. It has led me to the point where I firmly believe that there's two important qualities and processes to finding good trades and being successful at taking them. First is the method to find these coins to trade, right? You have to have an efficient process. You have to know exactly what type of setups you're looking for, and you need to be pointed to that direction right away. And once you're pointed to that direction, there must be a solid strategy that is very unique to what other people do. It can't be the typical RSI, it can't be the typical MACD. You can only master it so great. Think about it. $1 million trader, do you think that he's that much better at reading RSI or MACD than you are? I don't think so, because it's really not a complicated indicator to use, and anybody could learn it and master it quite well, in my opinion. So there must be more to it than that, right? Also, when you're relying on the confluency of multiple indicators, such as you're evaluating MACD, you're looking at RSI, you're looking at volume, you're looking at EMAs, you're trying to do Elliott wave theory as well. Maybe you're even looking at order blocks. Maybe you're looking at CCI. Maybe you're looking at that ADX. So Bollinger Bands, Ichimoku clouds, right? All these different types of indicators, I've looked at them all. I've used them all at one point or another. And I find that the most difficult part about using these indicators is finding the confluent reasons to enter a trade, because you have to look at so many different variables, and there's a spectrum of different things to evaluate for you to make an informed decision, for you to exit that trade, for you to stay in that trade, for you to enter that trade. But what if there was a way for you to keep using these indicators that you're using now, but also combine it in a way where it's going to be more efficient to understand these variables, these price points that you're at, where these indicators are, what it's doing at these precise moments, how it's behaving when, for example, how's the price behaving, for example, when the RSI is really high relative to the MACD, relative to the EMA, relative to CCI or ADX, or a bunch of these other indicators. What if there's a way for you to gauge all of these simultaneously in a very efficient way? This way, you would be able to save time on manually processing all of this. And this way, some of the processes would be automated in terms of evaluating your decision and also helping you determine what you should or shouldn't be doing. So just to summarize what I've been talking about, first of all, having a method to scan the market, a very efficient way to look for the most volatile coins with the most volume, so you can be pinpointed to exactly what type of trades to take for that day. And the second thing is, after you've been brought to the attention of these coins, you need to make a decision of what to do and how to do it especially. But it needs to be in a unique way that's different than every other Joe Blow out there that's using RSI or MACD. You have to have a unique strategy that's going to set you apart. Otherwise, you're just going to be like every other sheep in the pond doing the exact same thing. And long term, that's really not going to work out. I'm just trying to figure out my way out right now. It's my first time going to the park here. I didn't even realize that I lived this close to a park, which is actually amazing. So anyways, just to summarize, if you have those two qualities down, finding the ways to trade and being able to make informed decisions immediately, you will be a better trader than most. So just think about it deeply and maybe take a few minutes to yourself and say to yourself, or ask yourself, do I actually have a very efficient method of scanning for a coin to trade? And if I don't, What can I do to develop this method? And then secondly, ask yourself, even if I had the perfect coin to trade, would I know how to trade it? And what would be the most efficient way to trade this coin? And if you can solve these two problems, you will be a better trader than 99.9% of the traders out there. So after 9 years of trading and deeply analyzing how I can improve my game, these are the two major categories that I've concluded. That I need to find a better way to, first of all, find the coin to trade, and secondly, find the best method to trade this coin while factoring in only the most important indicators and leaving out all the ones that have not helped me much in the past before, or indicators that everybody is currently using already. We must differentiate ourselves from the others out there. So after 9 years of being a professional trader and trading in the millions of dollars and managing a multi-million-dollar portfolio as well, I've now hit a brick wall a few months ago because I severely wanted to improve my trading strategies. So this is what I'm going to present to you in a few weeks. After thousands of hours of research over the past few months, I finally developed, in my eyes, the perfect way to scan the market to find the best coins to trade. And because of this new indicator of mine, you are going to save yourself lots of hours every single day. It will be able to scan the market in 5 minutes, where it would take you over 5 hours to scan it manually every single day. And you will find the perfect coins to trade every single day. On top of that, I'm also developing a strategy right now that has been back tested with a severely high win rate. And the success rate is unparalleled to anything that I've ever used before when I back test with TradingView. So my two main points to take away from this is that I'm going to be releasing a major indicator that's going to help you find the best coins to trade every single day. And I'm also going to release my ultimate strategy that is completely unique to anything that you have seen before. And it's also unique to anything that I've done before, because I've taken a step back. I've thrown away everything that I know because I said, lots of this is garbage. Lots of this is trash. And this is what I need to do that's different than other people. So give me about 1 week and I'm going to introduce to you guys one of the best indicators. And I'm also going to show you one of the best strategies that will help you become hyper successful in this upcoming bull market. And if you follow these strategies and use this indicator, your chances of succeeding is going to be so much higher than other people out there. Anyways, have yourself a great day. And I hope that you guys are all doing very well. Bye now.